If you're like many Americans, you've waited until the last minute to do your taxes. In fact, you probably still haven't done them. They're due on Tuesday, by the way. But also, if you're like many Americans, you look forward to your tax refund like it's a second Christmas, which means you're probably doing them wrong. Firstly, let me quickly dispel the myth that the US government does not have the power to tax your personal income. Despite what many sovereign citizens might tell you, they do. Article 1, Section 8 of the Constitution states that the Congress shall have the power to lay and collect taxes, duties, imposts, and excises. But just to drive the point home, in 1913 they passed the 16th Amendment, which states that Congress shall have the power to lay and collect taxes on income from whatever source derived. On to another myth. They didn't pass income tax to put Al Capone in prison. That just doesn't work with the timeline. Al Capone was a notorious gangster during Prohibition, illegally selling alcohol and killing cops left and right. They couldn't get any of those charges to stick, but they could get him for tax evasion. Because as I'll get to later, even illegal income has to be taxed. And that's what eventually put him in prison. Income tax started in 1913, Prohibition started in 1920, and Al Capone was put in prison in 1932. So no, Al Capone is not the reason you pay income tax. But really, most of you don't pay federal income tax. Remember this from 2012?
There are 47% of the people who will vote for the president no matter what. These are people who pay no income tax. 47% of Americans pay no income tax.
That probably wasn't the most tactful way to say that, but it's true. It's strange to remember a time when saying something true but in the wrong way would end a political career compared to what we have now. But anyway, an easy way to figure out if you're part of the 47% of takers who pay no income tax is to look at your tax refund. If you get back all of the money that was withheld, or in some cases, which I'll get to later, more, then you paid no federal income tax. You're part of the 47%. So let's take a look at what happens to your paycheck. Let's use this poor guy as an example. He only has one job and he's single. Because guess what? The average American adult is no longer married. So take that, all you married weirdos in the minority. Really though, being single or married doesn't change much about what I'm going to talk about here. It'll come into play later when I talk about tax brackets. Anyway, he makes $36,000 a year and gets paid bi-weekly. So a paycheck of $1,500. But he doesn't get $1,500. As you all hopefully know by now, by working, your employer takes a cut of that money and gives it to the government. How much can vary widely. But to start off, everyone pays Social Security and Medicare taxes, which together are called FICA taxes, which is a standard rate for everyone regardless of income. Social Security is 6.2%, which of our example guy's paycheck comes to $93. Medicare is 1.45%, which comes to $21.75. So right off the bat, that's $114.75 that he won't get back and he'll never see again. Unless he lives long enough to reap the benefits. But you pay into Medicare regardless of how old you are or how much you make, and in return for that you get no healthcare until you're 65. Although by the time you're 65, they'll probably have raised the age. Anyway, the next bit is the part that everyone complains about. Just to start off, I'm going to completely ignore state income tax, because there are 50 different states with different tax percentages, unless you're lucky enough to live in one of the 7 states with no state income tax. So if we go by the mode, no state income tax. But federal income tax, or at least the portion that's taken out of each paycheck, is called the federal income tax withholding. I wish I could tell you how much that is, but it changes based on income and how much you want them to take out. I'll get back to that in a second, but the average is 11%. So for our modest little earner, that's $165. He'll probably get that back, or at least most of it, but for now, that's a portion of his paycheck that's just poof, gone. So in total, of the $1,500 he thought he was going to take home this paycheck, 18.65% of it was taken out in taxes, leaving him with just $1,220.25. But that's not all. If this little guy thought he was just going to go to the store and buy something worth $1,220, he's forgetting about the consumption tax. Here in America, you get taxed twice. First on the income that you make, and then again on the things that you buy, commonly known as the sales tax. Essentials like food and medicine are not taxed, but frivolous things like Xbox games or tampons are. I'm totally only saying this to get a rise out of you. I personally don't believe that tampons should be taxed, but they are. This is a major source of revenue for both state and local governments, and as a result varies widely, not just state to state, but city to city. But the average is around 7%. which means that of the $1,500 he thought he was earning at work, he can only go out and buy $1,134.83 worth of stuff. Now back to the federal income tax withholding. This is the part that almost every American messes up because it's mostly up to you. You tell your employer how much to set aside for the government as taxes. No, before you ask, you cannot tell them to take nothing. But you do determine basically how much gets taken out. When you started your job, you filled out one of these. It's called a W-4, and you probably don't remember it, because you probably didn't read it. Quick, how much should our little example guy put down on his form for his number of allowances? If you said 0, you're wrong. I don't know why our parents told us to do that. Actually, I do, but I'll get back to that later. But oftentimes your employer will say if you don't know what to put, just put 0. And this is the worst possible answer. Basically, by putting 0, you're telling the government, I have no need for this income, so feel free to take as much as you like. And they will. 1 is a better answer, but still not the correct answer. The top half of this form is a worksheet that helps you figure out how many allowances you should take. Line A, enter 1 for yourself if no one else can claim you as a dependent. This is why your parents told you to put 0, because they can claim you. Your income is their income. But you're an adult now, at least statistically according to my demographics data. And so is this guy. So far, 1. Line B, enter 1 if you are single and have only one job. Or if you are married, have only one job, or your spouse does not work. So if you're married to a stay-at-home mom or dad, that's you too. Or your wages from a second job or your spouse's wages are $1,500 or less. So basically, if your second job is, say, making YouTube videos. So most people should be putting 1 on this line as well. The rest of the form has to do with whether you're married or have kids or not, which this guy doesn't. So how many allowances should he be claiming? 2. How many allowances should you be claiming? Probably at least 2. What do these allowances really change? If you claim 0 allowances, the government takes a huge chunk of your paycheck, like upwards of 20%. You'll probably get most, if not all of that back at the end of the year as a tax refund. That huge check that everyone seems to view as a gift from the IRS. A tax refund means that you paid too much tax throughout the year, because you didn't claim enough allowances. If you claim 2 or more, your federal tax withholding is less, meaning your take-home pay is more, but your tax refund is also less. This doesn't mean that you paid more or less in taxes, it just means that you didn't overpay as much, which is a good thing. It's not like the government pays you interest on that money. Ideally, you want your tax refund or how much you owe to be as close to 0 as you can get it. So let's say you and a coworker get the same wages or salary, have similar family situations, but he gets more per paycheck. At the end of the year, they owe $150 in federal income tax, but you got a $2,000 tax refund. Who paid more in taxes? The answer is neither. You both paid the same amount. They just have a more accurate withholding allowance. So perhaps a better question is, which one of you is the chump? Now let's talk about actually doing your taxes at the end of the year. Your employers have until the end of January to get you your W-2 for the previous year, and you have until April 15th to file your taxes. This year you have until April 18th because the 15th falls on a Saturday, and both Easter and Emancipation Day are being observed on Monday, so Tuesday. But still, just like a professor giving you an extension on your homework, many of you are going to wait until the last night anyway. A common income tax myth is that the more money you make, the more you are taxed. Or to put it another way, you can make up to this much while getting taxed at 15%, but if you make $1 more, you'll get taxed at 20%. Many people actively don't seek raises because they think it'll bump them up to the next tax bracket and they'll be taxed more, which simply isn't true. Let's stick with this guy and still say that he makes $36,000. But for comparison, let's add in this guy who makes $125,000. Still single with no kids, just better paid. Since a game of Monopoly doesn't have that much money, each one of these dollars stands in for $100. These are their combined incomes. From their jobs, their lottery winnings, their drug dealing and prostitution rings, and their treasure troves, which is money that you just find laying on the street or in a literal treasure chest. You have to claim all of that, or at least you're supposed to. Yes, even your illegal incomes. Your tax filings aren't supposed to be used as evidence of a crime against you unless that crime has to do with taxes, but come on. Anyway, here in America and most other countries, we use what's called a progressive tax system, which means that the more money you earn, the more that money is taxed. Not the more money you earn, the more you are taxed. A regressive tax system would be the reverse. The more money you earn, the less that money is taxed. No country uses that because it's incredibly unfair. So let's take a look at what we do use. Again, we're using the single person tax brackets. If you're married or filing as head of household, the brackets shift a little, but it works the same way. So for these two guys, the first $9,275 is taxed at 10%. For this guy, the rest of his income, up to $36,000, is taxed at 15%, and his story ends here. He owes $4,936.25 in federal income tax. And depending on how many allowances he claimed on his W-4, he could either get a tax refund for overpaying or owe for underpaying. This is what I was talking about when I gave the example of you and a coworker getting paid the same. You both owe the same amount. But depending on how many allowances you claimed and how much you paid throughout the year, you both could have wildly different tax returns. Now for the rich guy whose story continues. The 15% tax bracket goes up to $37,650, so everything between $9,276 and $37,650 is taxed at that rate. That first bit is still 10%, the second bit is 15%. The next bracket goes up to $91,150 and is taxed at 25%. And the next bracket goes up to $190,150, so only his earnings up to $125,000 are taxed at 28%. So in total, he owes $28,036.75. As you can see, all of his income is not taxed at 28%, it goes up with each bracket. And now you can see why a regressive tax system would totally benefit the rich, and some people say a flat tax would too. But now we can also see each guy's effective tax rate, which is the average rate across all brackets. The rich enclave soldier effectively pays 22.43%. The poor Brotherhood of Steel soldier pays 13.71%. So the rich guy does pay more as a percentage, but at the end of the day, he still takes home over triple what the poor guy does, so yeah. However, the story doesn't end there, because of course it doesn't. I didn't figure this part in because it gets really complicated and changes for literally everyone. But let's just go back to the one guy making $36,000 a year. His Social Security and Medicare taxes are calculated using that number, and they're taken out of each paycheck and they're just gone forever. Your federal income tax does not care about your FICA taxes either. They're just gone, and you're still taxed on the $36,000. But your federal income tax does care about certain other things, like being able to afford to live. You have two choices for figuring out how much that costs. You can itemize your deductions, which takes forever and is almost always not worth it. Or you can just take the standard deduction. If you don't know which to take, just take the standard deduction. It's almost always more. I've spent many hours itemizing, and I suspect many of you have as well, just to find out that you wasted your time. Just like the tax brackets, they change based on filing status, but for a single person, it's $6,300. It doesn't change based on income, but it does change after you're 65 years old. This means that he is not taxed on $36,000, he's taxed on $29,700. The standard deduction also takes into account any state or local taxes you might have paid. If you itemize your deductions, you'll take those into account, as well as any other taxes you might have paid, like vehicle registration or even sales tax. But again, in all likelihood, the standard deduction is probably still better. But along with deductions, we also have credits. And this is where people end up paying no federal income tax, or even better, get extra money from the government. The two most common tax credits are the Earned Income Credit and the Child Tax Credit. If you're single with no children, in order to get the Earned Income Tax Credit, you must make no more than $14,880. Even after the standard deduction, he earned far more than that. But for each child you have, the maximum income rises bigly. So for funsies, let's say that he has one child. He's still single, which makes it a little less fun, but it does change his filing status to head of household. Rather than showing you how the brackets shift and everything, just take my word for it that filing as head of household and taking the standard deduction, he will now only owe $3,792.50 in federal income tax. Now we take a look at credits. While deductions reduce the amount of income that you're taxed on, credits reduce the amount of taxes you owe. For his income with one child, he gets $1,530 under the Earned Income Credit. But on top of that, you get $1,000 for each child you have from the Child Tax Credit. So in the end, he only owes $1,262.50. So you can probably assume that he overpaid his withholdings throughout the year and he'll get a refund. If he had two kids, he would owe negative $1,350.50, which means the government would pay him on top of whatever withholdings he would get back. This is why the majority of Americans are in the 47% who pay no income tax. This is why you're probably massively overpaying out of each paycheck and should ask your employer for a new W-4. And the next time someone tells you that they don't want a pay raise because they'll get bumped up to the next tax bracket, or someone who gets a massive tax refund tells you how they can't stand all those moochers on welfare, you'll know better. Hey guys, I just wanted to quickly apologize since I've missed a few weeks lately as I got used to my new schedule. If you've been wondering what's been going on lately, or you'd like to know what my topics are in advance so you can have some input on them, make sure to follow me on Facebook and Twitter. It's been a while since I've mentioned this, but if you know anything about the recent YouTube ad controversy, my channel's ad revenue has taken quite a hit. So I also have a Patreon which lets you directly support my channel so I can devote more time and effort to these videos. But if you enjoyed this video or you learned something, make sure to give that like button a click. If you'd like to see more from me, I put out new videos every Sunday. That's right, from now on it's Sunday, not just the weekend. So make sure to credit that subscribe button. But in the meantime, if you'd like to watch one of my older videos, how about this one?